All right, so we're back, and I have a special guest, Tim Fleming from Allstate. Some might say you're in good hands with this guy, but I'll let you be the judge of that. Tim and I actually go way back, pretty crazy. We went to elementary school together, so long history. So anybody that's going to St. Patrick's in Smithtown, this is what you get.
This is it right
as
here.
As a result.
Yep. Green slacks, green sweatpants, everything green.
Everything green. But you didn't stick around, man. You didn't hack it.
No, I kind of left after fifth grade to go to public school. The nuns had enough of my
Shenanigans.
Fifth grade shenanigans, ripping pockets off of kids' shirts and all that kind of stuff that we used to do. But we're much more grown up now.
Yes, much more responsible. We have kids, yes. Or at least we try to be responsible. Yeah. But in today's in today's age, insurance obviously is a huge piece of the buying process and getting a home. But also there's other services with life insurance and different types of policies that you provide. So I'd love to just share a little bit about what it is that you do. How did you get your start in insurance? Because you weren't an insurance guy coming out of college, right?
No, I was not. No, coming out of college, I worked for a lacrosse company called Lacrosse Unlimited. We had stores all over the country. I ran their website for a long while with my brother Brendan. Then I moved over to that team sales, ran their old team sales division, which was basically like anything you could make overseas or here, t-shirts, hats, all that stuff. And then eventually I actually went to New York Life, where I got my Series 6 and 63 and started doing life insurance and retirement planning. But my mother was a financial planner, so I've always been in the background with insurance with her. I've always had a whole life policy. I had term policies. I had a cancer policy. So, I obviously come from a background of believing in insurance. And then after a couple of years with New York Life, I bought an Allstate agency in St. James, New York. So everybody from St. James, Smithtown, Comac, all that over there. Good to see you.
That's good.
And now with John, he's great. He does an unbelievable job. Everybody that I send him and he sends me raves about how good he is at what he does and how much he's there for his clients. And that's the same with me. That's why I'm an agent. The one thing is you can go anywhere, yes, for insurance. There's tons of companies out there. But do you want to get a teleprompt every time you call? Do you want to only be able to go on a website? Do you only be able to talk to customer service, somewhere else in another country, which may not work for you,
right?
So
obviously, so you've been at Allstate now for
be 3 years in September.
Okay, and so from a buyer's perspective, what would you recommend to them? Like, what would your first step be?
There's two ways to kind of go about it. The first thing I would say is yes. Obviously I have Allstate, so if it's one of my customers and they were going to buy a home, they usually think of me first. So that's usually get a call from them. On the same side of that, though, you may have somebody that you're working with at State Farm with your cars, and you want to check out see what their bundle's like. Each company bundles differently, so you might get a better deal on the home with one company when you do the car. That's kind of works for us. You get about 25% off the home when you bundle a car. Other companies, maybe you get more off the car. You might get 25% off the car, and maybe the home is only like a 3% discount. So I always say go to who you're comfortable with. If you're asking John for a recommendation and he sends you over to me, my first question is, hey, first it's, hey, congratulations on the home. Is this your first home? Because we want to get an idea of what stage they're at. Is this a young couple who doesn't have any kids that are buying their first home? Or is this a, 55-year-old guy and wife with grown-up kids that maybe have bought 2 or 3 homes,
So as far as insurance policies go for houses, is there any differences between the carriers in terms of what they're?
There is. Back in the day, I have a book of business that's been around for 35, 40 years. The guy was with Allstate. So I have some older customers that have an older policy. So what a lot of people don't realize is when you get that policy, that's a contract with you and that insurance company that they're going to do X, Y, and Z. They can't just absolutely switch you into some brand new policy with less coverages, right, without explaining to you, like, it may be cheaper, but something may not be covered. So on the older policies, there was basically, if it wasn't excluded, it was included. So that would mean like if they would list all the known perils that they covered.
Right.
The issue was sometimes there was ones they missed. And then now they were paying out, like on Long Island, Allstate will pay out on these old policies if your cesspool collapses. Nobody else will do that. That doesn't happen anymore. But if you had one of the homeowner deluxe from in the 80s, which we have a lot of those out there, believe it or not.
You're protected. You're
protected.
grandfathered in.
Right. The new policies with every company, it's the opposite. If it's not included, it's excluded. So they'll include what is covered.
Right.
The roof obviously is covered if a tree falls on it. But if a hurricane, you hear about the hurricane deductibles, those are all different between different companies. Usually it's about a 5% for hurricane. The lowest I've ever seen it was 3%, because I can do outside companies. I am also a broker. So when it comes to the home, I can broker out homeowners insurance if Allstate's not a good fit for them.
That's similar to my model too, because yes, we are an independent mortgage banker, but we also have the ability to broker out too, because not everybody fits into that box.
Yep.
So I didn't realize that you did that. That's a great service.
Yeah, like we don't write on the water. So anytime I have somebody on the water within a certain amount of the coastline, I go to one of my advantage.
You said that really well. You didn't say water. You said water.
Water? Yeah, that's pretty good. I usually do say water because I always get made fun of when I go out to see my relatives in Wisconsin. So,
sure.
Yes. So they are, and all insurance companies aren't the same. You could, Allstate's been around a very, very long time. It started in Sears. The agents worked in Sears. It's always been agent driven. That's what you get. You get me. You don't get some random phone number. Right. You're calling my office. You're getting me, Darlene, Sherry. My niece Aiden worked in the office this summer. When she was home from college. So you're getting a full suite of coverages. I do homeowners, car insurance, do life insurance. We do umbrella policies, boats, jet skis, RVs, campers. I always tell people if it's got wheels, walls, or a life, I can write it.
Right.
So that's basically everything.
Explain the umbrella policy.
Okay, so the umbrella policy covers you above your limits on your car and homeowner, and that's liability limits. So the different coverages, so liability covers someone getting hurt because of your action. So in a car accident, we call that at fault. You're at fault. You rear-ended someone, they broke their back. I mean, it's extreme for a rear end, but let's say you went fast enough. And your liability coverage is $250,000, $500,000. That means the first number is what each individual can get in the car accident, $250,000. The second number, $500,000. That's what the total of that accident can go to. So if you have 3 people and they have $250,000 each, we'll cover the $500,000, but that $250,000 now you're on the hook.
Right.
So you have to come up with that. So you have to exhaust all your other coverages with the car and the home before that drops down.
But you mentioned before about paying for your policy, and this is important because a lot of times a lender will ask that your policy is paid, prior to getting to the closing rather than after, or actually I should say at the table. It's been my experience that when you wait to do it at the table, sometimes the money doesn't go where it's supposed to, and then all of a sudden clients are getting cancellation notices saying, "Hey, we never received payment."
Right.
So I always tell my clients to make sure you pay for your full year in advance. Make sure you get the paid receipt, you provide it to the lender, and then you're not actually paying for it at the closing.
Right. Yes.
This way you ensure that it's gone to the right place and your policy is in effect.
Yep. And we really can't give you what they need. The binder won't show paid on it unless you pay.
Right.
And so 9 times out of 10, John is going to want a paid binder. And the insurance companies usually don't like to do it that way either, unless you gave me a check or
or cash. Timmy takes cash.
Yeah, cash
policies.
Yeah.
Yes. He only did that one time.
Yeah, one time. No, I do.
But just meet him behind his building.
That's funny. We don't really do take cash because obviously there's, you don't want somebody say, "Oh, I paid," and not get it. But what John's saying is, what people get confused is like, why am I paying? I'm escrowing for my taxes and insurance. So why am I paying this up front, and then in 2 months I'm going to start paying again? Right. So I explained to them that too. Well, John's escrowing for next year's taxes and next year's premium.
Yeah.
So you're paying this year's premium. So you're going to pay every month,
building up for the next.
Right. So
premium.
that when you come back around to this closing date, your anniversary of buying that home, the full money's there and they pay it.
Right.
It's also how we when I talk to people and I have a better rate than their current homeowners insurance, they'll say, oh, I already paid it in full for the year. Well, that's fine. We usually just get a refund. So if we cancel it in the 6 month, you get 6 months of refund back. And then we tell them, hey, make sure you hold on to that because your escrow is going to be short. You know, don't spend it. That's not free money. Send it in or put it in a bank account where you're going to have it for next year. Because taxes go up every year. Insurance, it does go up. There's inflation riders and insurance to keep up.
Yeah, escrow is always a pain in the butt.
Yeah.
So one of the things that I'd like for you to cover too is water damage. We had a boiler that had actually a water tank that had a leak, and we ended up having to reach out to Allstate.
Yes, that's Allstate. Yeah. So the water damage, that's a tricky one too for people that don't really understand. So any water that originates outside the home is not covered.
Right.
So if you have a really terrible rainstorm and water comes into your basement and you just did a $50,000 basement over, that's not covered. Everyone calls everything that comes in the house a flood. It's not really a flood. Right. You know, when you need flood insurance, you know, that's another confusing thing. Like, you don't need to be in a flood zone to have flood insurance. So you can get a pretty cheap flood policy on your house when you're not in a flood zone. So if some water does come into the house from the outside, they would cover that up to a certain amount. So if you're in a place with a high water table that your basement's prone to flooding, you know, you might want to get a flood policy. You know, any water that originates inside the house, the damage is covered. So in your situation, it happens to a lot of people. They have an older water heater. They go on vacation. The water heater blows up. Like literally, like it's only aluminum and stuff. It corrodes, it rusts, and eventually it pops and all the water. There's no one there to turn that water off. So if you have a nice finished basement, it's going to be damaged. So all that is taken care of by like a home master or a service master or Serve Pro. You know, we have different ones we work with. I mean, Allstate has a great reputation. We do on the cars. We have claim satisfaction guarantee. So if you're not happy for any reason, I could put that in for you and you get the 6 months of collision or comp premium back. So that's one thing we have. And you know, if you do some research, there's some companies on the home side that still haven't paid out from Sandy.
That's incredible.
Or they went bankrupt from Sandy. You know, the government does step in certain situations. But, you know, claims-wise, that's a big question I get too. Why did my rate go up? I didn't have a claim. Unfortunately, the company itself, when there's lots of claims, loses money.
Right. And
they need to make it up. And the only way they can do that is by raising premiums. So that's why now a lot of people are shopping. A lot of people are not happy because, hey, my insurance went up 20%.
Sure.
Yeah, well, you know, the cost of a brand new car went up 35%. The used cars are up, 27%. The bumper that used to cost $3,000 to fix is now $5,000 to fix. So, we're not crying poverty here with Allstate. They're a big billion-dollar company, but it does affect everyone. Claims and fraudulent claims too. In New York State, people putting in fake claims. There's people driving with no license, with license plates that are fake and no registration. And then on the home side with the claims, same thing. I mean, the big confusion with the home policy is that people are like, I'm buying the house for $500, but you're insuring it for $7. Well, I don't understand. Because what you're purchasing it for is the market value, where we have the renovation or what the replacement value is. And a lot of guys now, mortgage companies will ask for the replacement value because they want to make sure it's more than what the mortgage is.
But isn't it offset by the cost of the land though? Because, when you're buying a house for say $500,000, the land is worth, let's say $250,000, $300,000. So
right. So some of that's in there that we don't insure land.
Right.
So what ours is, Allstate doesn't know what kind of claim you're going to have. So they say, all right, if this house burns to the ground, how much is it going to cost to rebuild it?
Right. And that's what your coverage is really based on.
Right. And it used to be $225 a square foot.
What is it now?
Now it's like $375.
Oh my God.
So if you do your math on your home, just take the square footage and divide it by the dwelling, and that's what you got to spend. So some of these older policies, you have a 2,000 square foot home and you got $300,000 to cover that.
Right.
That's not going to cover it.
It's not going to cut it.
You need at least $600,000.
How does credit impact somebody's policy? Because obviously on the mortgage side, credit is extremely important, and my understanding is it's similar with the insurance piece too, right?
Yes, credit is big everywhere, but especially in insurance and mortgages. And it's not always the other thing is that some people are like, well, I have an 800 credit score. So Allstate, what they do is they take everything into, they have an algorithm that if I knew, I wouldn't be sitting here interviewing with you. I'd be on a massive yacht somewhere selling that to other people. But I don't know that algorithm, but I do know what goes into it. So your credit, but it's not just the score, it's the type of credit you have. So if you have a lot of similar to what you see, where you're like, hey, we got to pay off this card because your credit score will go up 10 points, those types of things. On my side, it's more of, yeah, it's good you have a great score, but what type of debt is in there? Is it a lot of all different credit cards and lines of credit that you could default on, right? Installment loans, So they give you a score, what we call an insurance score, 1 to 16 on the cars, 1's the best, 16 is the worst. And on the homes, it's 1 to 55, 1 the best, 55. And it will factor in how long you've been with the other company. That's one thing we started out with was, yes, you want to call that who you're comfortable with. So if you had State Farm and your cars are with them, you're going to call them to go to home. But with Allstate, our tiering for pricing, we look at how long you were with the prior company. Because the idea is, hey, if you stay with State Farm 10 years, you're probably going to stay with us 10 years. So we're going to give you a really good premium
to keep you,
because we know you're going to stay.
Now, Geico also offers homeowners insurance. They broker it out,
right? Correct.
So that's where the whole bundling thing comes into play because they can't bundle, obviously.
Right.
So that's where the benefit of doing
right.
that.
So they'll give you a good deal on the car because you're bundling with their brokered out. But those companies come and go with Geico. Those aren't the same 3 companies in every state or even over time, because these companies go to Geico thinking like, oh, we can handle the volume, and next thing you know, Geico's putting on millions of home policies, and these companies are like, holy crap, we can't insure this risk,
right.
And they leave, and now you're stuck with, I have this company, but I don't know who's my agent now.
Right.
With Allstate, you're gonna have me. You're gonna with the home, car, boat, life, retirement. I have customers I call and I'm like, yeah, we do a lot from retirement. It's like, really? I'm like, yeah, I have a Series 6 and 63. I'm a financial, I'm registered with the state. I can sell mutual funds.
So, Tim, I appreciate you coming in today.
No, thanks for having me.
This was awesome. I definitely learned some stuff, and I hope that there's some good information out there for people to absorb. And if you have any questions relating to homeowners insurance or just insurance in general, or setting up different financial plans, definitely give Tim a call. He is local. I always encourage people to shop local. Same thing for mortgages. There's a lot of 1-800 numbers. You never know who you're getting on the other end of the phone. So definitely reach out to Tim.
Yep.
Do you have a website? How can people reach you?
If the easiest way is to call the office. The number is 631-208-5266. That I always say it twice. So 631-208-5266. You can email me, timfleming@allstate.com. If you go on Allstate and you search Tim Fleming, you'll find me. If you Google Tim Fleming, Allstate St. James, you'll find me. I do have a website on Allstate's page. I have Google Places. I'm on there. You can also
you're accessible.
Instagram, Facebook. You can message me.
And if you
Twitter.
If you can't find him there, he's usually at Del Fuego.
Yes, and if you'd like a margarita at Del Fuego's, come on down. We'll write your car policy and have a margarita.
Appreciate you, brother.
All right,
thanks.
You too, man. Thanks for having me.